From the Rhodes Centre for International Finance and Economics at Brown University, this is the Rhodes Centre podcast. I'm the director of the Rhodes Centre and your host, Mark Blythe. On this episode, a conversation with Professor Clair Priest. Clair is a historian and professor of law at Yale Law School and author of the new book Credit Nation: Property Laws and Institutions in Early America. In this book, she explains how, even before the United States became a country, laws prioritising access to credit set colonial America well apart from the rest of the world. This didn't just shape colonial economies, it was a key factor in the explosive growth of capitalism in 19th-century America. As you'll hear in this episode, we also have a guest host, Daly. She's a historian and professor at Mississippi State University and an expert on the economics of the American colonies. She's also a fellow of the Rhodes Centre. So without further ado, here's Anne.
I'm Ann Daly. I am here to talk with Clair Priest of Yale Law School about her new book, Credit Nation. So, Clair, I wanted to start by asking you how you came to write a book about American property law. What prompted you to research this topic in the first place?
I started this project, actually went back to when I first started teaching property law many years ago. I was interested in learning about just historical context on how property law developed in early America. And as I started to scour the secondary materials and I ended up looking through a number of 19th century legal treatises to understand how people had conceived of the development of property law, I noticed that there was a story that sort of jumped out at me relating actually to Parliament enacting a law that seemed to provide a property law for the colonies. And so I started to dig deeper into some of the colonial laws and just started kind of reconstructing a history. And I discovered this parliamentary act was quite important, but that there was actually an entire history of a transformation that took place in colonial America that I thought was worth exploring.
So your book is about how these British property laws are imported to the colonies and then change, ultimately creating the basis of this credit economy. And one of the things I found really striking and interesting about your book is you actually start with this sort of prehistory of British property law, where it worked very differently. So I was wondering if you could kind of like set the scene and explain to us how property law actually worked in early modern England and why it was actually much harder to borrow against one's land than it ended up being in the colonies.
Yeah. So in England, I mean, first of all, I'd like to be clear that in English law, there were active land markets. There was a huge credit market in England. But if you look at the doctrine, the sort of property law doctrine and how the institutions functioned, there was a preference for and a kind of mentality in which it was expected that where inheritance was more of a focal point, it was expected that land would stay within families over generations. Often there was a divide. So you might have the primary estate owned by a family that was legally protected from market forces to ensure that it would remain within the family and that the device of the trust was used for that purpose. And there were other legal constructs that could also keep land within families. But then there might be other outlying lands that were more the sort of marketable property, the fee simple lands of an estate. But with regard to the unsecured credit, so where no land has been pledged as a collateral, there were a variety of remedies a creditor could take to get the debt paid back, but it did not involve taking a full title interest in the land, what we would call a fee simple interest in the land. One of the writs allows you to take the debtor's chattel property. One of the writs allows you to take the body of the debtor. So that would be to put the debtor in debtor's prison. But often people would go to debtor's prison to protect their land. So we wonder, why are all these wealthy people in debtor's prison at this time? And it could be to protect the family interest in the land. If you were in debtor's prison, there was no authority to touch the land. There were some remedies against the land that involved like taking the income off the land or taking a short-term possessory interest to the land. But there was no way in which and the way you see it in the legal treatises from England is like an involuntary taking of the land, that you could voluntarily pledge your land or sell your land, but that the courts wouldn't involuntarily take it from you, a fee simple title from you.
So how did property law change in the colonies?
So the colonial charters gave colonial governments the authority to enact laws in the colonies on their own behalf. And the charters typically had a provision that said the colonial legislatures can enact laws not repugnant to the laws of England. So in theory, the colonies can just, take English property law with all of its privileges of inheritance and these remedies that creditors would have in England. But the difference was that the colonists are, land is their major monetary asset. They don't have a lot of wealth initially other than the land itself. And creditors are out there to extend money. Colonists are eager to get this credit. And it's not clear that the laws of England are the best laws for getting the most amount of credit possible. And especially once slaves get introduced, or even indentured servants, when labor force is part of the property, then there is a desire to have greater and more extensive remedies for even unsecured creditors. So you see some colonies, like, for example, Massachusetts, I believe, was the first to enact a law that said when a creditor's claim is concerned, land is going to be treated like a chattel commodity would be in England. And that means that, that writ that allowed you to seize the chattel would allow you to go and seize the land itself. So what happens, though, is that as the years go on, many of the colonies decide to keep the English laws. Some have now changed. And the main point is that there's a structure of federalism within the British sort of colonial system, if we call it that allows the colonial legislatures to determine what property is going to take on what status, and to have the flexibility to change their mind on that, and also to design creditor remedies and to set up the institutions that are going to serve the creditors when they come to make a claim. In the 1730s, there is an incident where both Jamaica and Virginia make adjustments to their law to be more protected. And again, all they have to do is sort of say, okay, slaves and land are going to be treated like land is in England, which doesn't seem to violate the sort of imperial constitution at the time, because they're supposed to be making laws that are like English laws. But the creditors go to Parliament, and there's a report to the Board of Trade on behalf of merchants to Jamaica that is quite clear that British creditors are going to Jamaica, and they said that their debtors, they wanted to go and see slaves in payment of debts. The slaves were sent off to hide in the mountains, apparently, so they could not find the slaves. They had no remedy against the land that was acceptable to them, and they are clamoring Parliament, we need a law for for all the colonies. We have to take that control of the colonial assemblies away from them. And Parliament responds, and they pass this Debt Recovery Act that has a bunch of components. But one of them is that all land, houses, slaves, and other forms of property will be treated like a chattel commodity when creditors' claims are concerned. It's important to note that it's when creditors' claims are concerned, because there became this sort of bifurcated system. So in Virginia, you have land and slaves being treated like chattel if a creditor is involved. But if it's just an ordinary inheritance matter, land and slaves were treated by primogeniture under English law. So it's a little complicated. This book has a lot of complicated doctrine, but I think it's helpful to figure it all out because it really explains a lot about what's going on at this time. So the Debt Recovery Act, had this provision of treating everything like chattel when a creditor was concerned. So this is Parliament, the highest legal authority throughout the colonial regime, requiring now in some colonies that they have slave auctions, that they have land auctions. So part of the project was to go and see, was this Debt Recovery Act actually put in place in a lot of colonies? And I, did a lot of work to verify that, in fact, in the 13 original colonies, I could see that the Debt Recovery Act was implemented on the ground. And then I sort of followed the story through the American Revolution into the founding era.
So am I right to get the sense that part of the claim is that at least when creditors are concerned in these disputes, the laws are almost always going to favor them, that they're going to be able to seize most property as chattel? Is that correct?
Yes.
Okay.
It is. It's important to recognize, though, that a lot of times you wouldn't expect everyone to get to the point where there's a court action and you're actually off seizing property. So I think a lot of the economy is just sort of operating in the shadow of these laws. They are definitely there when the creditor gets to that point. But, the vast majority of credit relationships are going to take place over a long period of time. And it's not clear that it's ideal for a creditor wants more of an income stream, wants a relationship with the debtor. And so it's not that everyone, but it just takes a trip to look at the court records of any colony and you will see they're just filled with debt actions. So they're definitely using the courts, but it's a mistake to think that it's going to be observable in all relationships, because I think that for the most part, the contracting that's taking place is what we would call like relational contracting. You're expecting, that it's going to happen over a long time and you're not going to use the courts.
Yeah. And we know too, these are very personal relationships that go on for decades, if not generations. But so the claim is that this is happening in part because Americans are borrowing so much, but it's also increasing their access to credit, right? You're more inclined to lend to someone if you know you can, at the end of the day, you can seize their land. And one thing I was wondering as I was reading your book is, what is it about the colonies that makes them need so much credit in the first place? Is it just that the laws change and so they can borrow more, or they do? Or is there something else, something more fundamental going on that's making them want to borrow so much in the first place?
Well, I think that there's a combination of things. One is that, and there's a whole story of sort of the expropriation of land from Native people that takes place. But then you're also sort of building a society from the ground up. A lot of people are coming without a lot of wealth. Land is their main asset. And, so if you look at a place like New England, I think a lot of this credit, things coming in are on the basis of just people wanting pots and pans and guns and plates, just the basic things that are difficult to make at home. Part of it is the consumer, just basic consumer needs. One of the areas of emphasis of the book is the way that the introduction of slavery in particular creates a demand for credit. And that is, if you think of the fact that the labor force is being purchased. So in addition to the land, you're purchasing your labor rather than encouraging voluntary immigration, you're compelling immigration and holding your labor as property. That is going to increase the demand for credit, because I've found agricultural manuals from the 18th century that would say that you could pay off the price of a slave in 3 years. And then after that, it is not, 100% profit, but it is then primarily you're extracting all the profits from that human being. And so to add additional slaves to your labor force is frankly, it's just a way to gain wealth. So the dynamic there is, not only is there a drive for credit, but I think it also impacts the way these laws and institutions are constructed, because they use slaves as a primary form of collateral. So slaves are the capital that is allowing the increase in credit. So there's a drive to buy more slaves, and using the slaves as collateral enhances that feature.
Mm-hmm. Well, and one of the things that struck me too is there's a sort of a fundamental contradiction here, right? Because on one hand, we have enslaved people becoming a really important form of capital in this system. And on the other hand, one of the things you describe is that in the colonies, there's much more widespread land ownership, right? Many, many more people have access to land. And this is kind of one of the roots of a sort of more democratic system. Colonists at least see this as making themselves very Republican, very free. So how do you think we should sort of square this contradiction? And I know this is a big question that American historians ask all the time, but we have a financial system that on one hand creates access to credit in ways that are seen as more democratic to some people, but on the other hand, it is founded on enslaving people. So what should we do with that?
Well, I think the tensions there are just central to understanding the history of the United States. And this is a problem, because to hold two opposing things in one hand is difficult. But I think with this book, one of the struggles was with trying to tell these stories that are running in parallel, even though they are apparently contradictory and very complex. But yes, there's a reason why the New England treatise writers of the 19th century are looking back, and this is just a glorious story for them, and putting the credit, the law and institutions that I described, like when you look back at the most, what I call the Whiggish accounts from Daniel Webster and Joseph Story, and it seems to be at the heart of this American exceptionalism account that's being formed. You see a lot of emphasis on law and institutions. And to be honest, historians haven't really teased that out of these writings, but they're just there front and center. They have been overlooked. At the same time, this system is also being driven by the expansion of slavery and its entrenchment. And so I would recommend, to me, the great book on this is still Edmund Morgan's 1975 book, American Slavery, American Freedom. And the final chapter of that book is just a magnificent account. The entire book is a magnificent account of this. But I think we all have to just gain comfort with telling a story of the United States that has multiple threads working at the same time.
I, too, share a love of Edmund Morgan's work. So to be totally transparent, for me, one of the questions it raises is to think towards the present. Like if we're thinking about how to grapple with the legacies of slavery and racial injustice that are still embedded in our financial system, if credit, and in particular policies predicated on expanding access to credit through people who don't have access to it now, is that really the way forward? Is that really going to be the best strategy, or is it sort of tainted from the start?
So, no, I think the idea of taking credit away from Americans, that's like never going to happen. That's never going to happen. And I think that...
Don't even try.
I mean, I think that one of the things that was interesting for me studying this period, and this relates to some other work I've done, like with my PhD, is that I think that these colonies were pretty small. They didn't have big populations. And the colonial assemblies were really responsive to the needs of, let's just say, it was the property owners. So there's an interesting, Alex Kazar has a book about the franchise after the revolution. And he points out that the people who are actually able to vote, I think he said that it was only 15% of human beings. It's the white male property owners. And it's a young society, so a lot of people are kids. And then you have women are 50%. Then you have various minorities that are excluded from the franchise. You have people who are not landowners. And so when I talk about the colonial assemblies, you realize we're talking about a group that was very good at representing the interests of the 15% of property owners. But they were responsive. So, even going into the 19th century, when you had a recession, and so let's just say very much like what we experienced after 2008, the legislatures back in the 19th century would have been able to jump in sometimes even just shut down the courts. They used to have these bank holidays, which was actually a way to shut down mortgage foreclosures. And I think that, what I see in the 19th century and even in the colonial period was that you would have what were called stays on execution, which basically just stopped the process of law until the crops were harvested, that sort of thing, putting in time delays and the like. And so this period of colonial American history infused an incredible amount of financial risk because it allowed people to leverage themselves to a really great degree. I also think that there were sort of backstops when things went bad and the process of law would shut down because, especially prior to there being any sort of social welfare state, having your society landless and homeless is not good for the stability of the system overall. And so I think one of the things we lost, and really with the kind of complexity of the mortgage, like securitizing mortgages, created this problem where there was an inability to respond, partly because nobody really knew who owned the mortgages anymore. And so I think that that's more the reform, is how do we have to create a system where when there is an economic downturn, which will inevitably happen, it doesn't seem to be good social policy to kick people out of their homes. And the pandemic, this was an experiment with that, these mortgage moratoria and stays on eviction. And it'll be interesting to see if these become more of a part of the legal tools available to deal with such things, because I think it's sort of new, but in a way, this is much more like what I think things used to be like in the colonial and 19th century.
Oh, I totally agree. One of the interesting things about the colonial period that you describe is when there's financial risk, it seems that some colonists' reaction is to try to protect themselves by taking things out of the market, right? So you talk about like Virginians, for example, are very good at strategically using the law to protect certain kinds of land from being foreclosed on. But now one of the ways that we deal with risk is actually to lean more into the market, right? So securitizing mortgages, that the whole point of that was supposed to be a form of risk management. It didn't work very well. But I think you're right that there's a pendulum swing back towards trying to prevent things from being able to capitalize or collateralized in the same way.
I think that things are still being collateralized and securitized, but I think that this array of legal measures like mortgage moratoria and that sort of thing seem to be more acceptable now than they were even, 10 years ago.
Yeah. So I want to switch gears a little bit and I ask you a counterfactual question, which you may or may not like. But I was thinking that the whole system you're describing is, as you've said, is predicated on access to what to colonists seemed like more or less unlimited land that they could seize from indigenous people. And it seems to me that one of the reasons that they're sort of willing to go along with these laws is that there's always a sense that there's more land that they can get, that it's cheap, that it will be available. But I wonder, let's say that we have a version of colonial America where there isn't a ton of freely available land that the colonists can seize. What do you think would have happened? Would we have developed massive credit markets in the same way? Would slavery have become as important? Or would we just have a completely different capitalist system? I mean, maybe it just looks like England.
Well, that's an interesting question. I think to really understand the counterfactual, you have to say, okay, what's your stopping point? Because I think the colonies themselves are being created because there's some land that is being settled. And I think within some communities, there's actually a historical literature that would show that this idea of endless land it has been overstated. I think that, in fact, people within a town, or in certain areas, would certainly find that it's a condition of scarcity. So I actually am not sure that you would have found a different system, because I think really the dynamics that I see leading to this legal reform have more to do with the context of a sort of transatlantic colonial rule and having credit coming in from the UK and the desire for English and Scottish creditors to have protection when they lent money. And so the Debt Recovery Act, I think, would have happened either way. I mean, where I see the endless land argument had to do with the way that slavery expanded in the second half of the 18th century and then the 19th century, because slavery was associated with a staple crop production. So when you have all this investment in the slave labor force and the land, slaves are used to generate profits from the land, often in this kind of monoculture way. And tobacco led to extraordinary land exhaustion. So you could only plant tobacco, I think, for 3 years in one place, and then you had to move on. Otherwise, you're going to start to have really bad quality tobacco. And so I saw this actually, some of the Virginians, like Robert Carter, as he's acquiring of one of the biggest estates in all of Virginia. And he says, well, with tobacco the way it is, this is just what I'm going to need to keep going for my grandchildren to also have an estate, because we're exploiting the land so rapidly. So that's a tendency of slavery to not use agricultural practices that are sustainable. And you see that in the late 18th century, this elite that, where we go visit the homes of Madison and Washington and Jefferson, they had moved to wheat growing. Tobacco was the most lucrative areas for growing tobacco were farther west into, like, at that point, I think it was Kentucky and the like. Cotton changed everything also. So the founders did not know cotton was on the horizon. And I think that because of this issue, they perceived slavery as possibly dying out. It's controversial. I think, what did the framers actually think going to happen with slavery? There was a strong argument that it wasn't going to survive because of this need for land and these unsustainable practices. And then when cotton started getting planted in the 1790s, it's just after, the Constitutional Convention is 1787. And then, within 5 years, the first cotton crops are starting to be produced, and then everything completely changes because of the profitability of that. But I think that these particular laws, I actually think, are not so much about the availability of land. I think that the fact that there was able to be this sort of mythology of equality had to do with the availability of land. And the fact that the British imperial policy was to dole out land in small parcels with the goal of being put into immediate cultivation. So I think my understanding is that a lot of South America had a different policy. Like the Spanish rule involved a different policy where the idea was, we need to, much like Spain having rule by a landed elite, we need to, of course, set up a landed elite throughout our colonies, and then they will take care of distributing the land, in a top-down way. And it's interesting, a lot of Latin American politics, even up until this day, have involved like that really never taking place. I highlight that only to say that it is remarkable that the way that the British adopted this scheme of, wanting land to be doled out in as small parcels as possible for the most part. Anyone under the head rate policy, anyone who landed, on the colonial shores was going to get some amount of free land, and they could lose it if they didn't put it into cultivation. So there was this general policy against hoarding. Of course, when a colonial governor came, they'd be paid with a big chunk of land. So it's not like there wasn't a lot of land equality, that there wasn't people hoarding big estates and the like. But for the most part, to have this policy, and it's interesting because it shows that in so many ways, the British are just not focused on recreating their society in the colonies by taking this stance of creating colonies filled with landowners by all of the ways that they invested in and promoted slavery through things like the Debt Recovery Act. There's not a lot of, thought about like the kind of society that was going to come out of all of that.
Yeah. But what I find so fascinating about that is, I think you're absolutely right that the decision to distribute land broadly and in small quantities was not made for any kind of political or social engineering reason. They just want people to cultivate it and send as many crops back as they can. But it is just such a foundational and transformational decision that has shaped so much of American history, our politics, our culture, our society, our economy. And there's just so much that we can date back to that decision to distribute it so very differently in a way that hadn't really been done before.
It's interesting. Some of the original charters emphasize that the crown will reserve to itself 20% of the gold and silver mines that are found. The original idea was, okay, Peru is really the model. They're bringing shiploads of silver back to Madrid and enriching everybody in Spain. And so the thought was, okay, let's hopefully go out and find some gold and silver mines. Maybe all of the Americas are like Peru. So I think this small cultivation idea was not the first best goal. It was their backstop, basically. Like, if we can't find mines, people have to get working and do something.
Yeah. Sort of just to conclude, I'd love to hear a little bit more about the process of writing this book, how you went about writing it.
The biggest source that I used in writing this book were actually colonial laws passed by the colonial governments. I made a choice to cover as many colonies as I possibly could. Now, that's a choice that's sort of unusual for a historian. I think there's a tendency to sort of tell a bigger story using a local focus. But I felt that there was such a void in the literature on this aspect of our history that it would actually be most helpful to other people if I tried to give an account that really considered as many colonies as I could, with some attention to the differences based on the region of the Americas that you were in. And the main, what was nice about using the colonial laws themselves is that they often explain a problem that they're trying to address, and then how the statute that they act is going to go about addressing it. And so they'll say, because we're having this problem with recording titles, and many people are finding it very inconvenient, to go into the capital and record their land, we are now going to set up a system where you can just record in the county courts and something like that. Or where we have found that this law is getting in the way of us, getting the credit that we wanted. We're now going to pass a law that does the following. And so I found those really useful because I really had no reason to question. Again, as long as you take into account that these assemblies are not representing everybody, that these are really the local landowners, probably the elites within the colony who are writing these laws, there's no reason to doubt that their explanations are authentic. A lot of colonial laws, letters written and often either by merchants or by even the colonial governors. So I try to find out who, even just using Wikipedia, finding out who are all the colonial governors of certain colony, and then going through and just seeing which of them had letters that had often been published or were online, and then going through those letters to see what are they writing about in this year. There's some major law being passed. And very often I found that they actually would want to explain what was going on. Because this was such a salient issue for people, they actually are writing about, well, we really felt we needed credit. This was a big issue in the colony, and they're explaining it to England. So I thought that, to someone in England, I thought those letters were incredibly helpful. And we also have the colonial state papers are an archive that's held at the British Public Record Office. And it's wonderful that they were digitized up through 1732. And I think what happens is that the volume just expands so much as you get closer to the American independence, they balloon out, so they're no longer digitized. But the wonderful thing about them being digitized until 1732 is I could do keyword searches and the like, and I found a lot of my sources are from that. And so the thing about this book was that there was so little on it. So even, title recording in the colonies, there's sort of a scattered set of little articles or, sort of incomplete accounts. So a lot of it was I just really trusted the primary materials and these statutes and things that I could find. And then you can also go to the archives in any colony and look through papers, look through documents. So that was the process of this actually involved a lot of reconstruction just from the documents themselves. And the problem with studying property is you quickly realize that property really sort of infuses itself into everything in society in a certain way. And so this kind of coming up with the credit nation account, it slowly emerged, particularly when I started studying the title recording systems and where they emerged, and finding out that, recording mortgages was a really big deal and people were highly interested in it. So everything kind of started circling around credit, and that's where the account sort of emerged out of all these documents.
Well, that's fantastic. And as a historian, I have to say that I agree with the plea for doing that kind of archival research and legwork. You really start to understand not just what happened, but why it happened when you can get down to that kind of very granular level. So I'd like to thank Clair Priest for talking to me about her new book. And thank you so much. It was wonderful to speak with you. Really appreciate it.
Thank you so much. It's really fun to be on here. Hope to talk to you again soon.
This episode was produced by Dan Richards. You can listen to all our episodes anytime, anywhere by subscribing to the Rhodes Centre podcast wherever you listen to podcasts. We'll be back soon with another episode of the Rhodes Centre podcast. Thanks for listening.